Hello guys, today we try just to answer a question: why selling short has an advantage if you are thinking about going long. Now understand that if you are going to be a day trader, you should be able to do two things: either going long or going short. It's part of your job, okay, or part of your business. I always say business. I don't like to say job, okay, because you are not paid by hour, you are paying by trade. What do you do as a trade? So I will explain to you why when you go long or when you sell short, why selling short is always better. That's why you see sometimes good things. You see how the stocks, especially from February when we had the correction until now, you see that some stocks are going down each day. And you see sometimes almost all the market is red. So this is the opportunity either to sell short or to buy option puts. Okay? So it is just the market gives you opportunity to make money. Now, if you think always to go long, you will have always a problem. Sometimes we don't have that many stocks that go long. So there are only few. So in the whole market, which is around 24,000 stocks and ETFs in USA market, it is too hard to find those stocks, and if they continue going up. Okay, so let's give you right now with a short demonstrations to show you how selling short has an edge. It means it has an advantage. Okay, so let's go to the explanation. Now, as you can see, now let's say just to give you an example. Okay, this is a candlestick of yesterday. It means the stock is going up yesterday. Sorry for the handwriting. Now, let's say the stock was 25, 23. It goes to 25.99. Okay? So this is yesterday. So let's take today. Okay? And let's take, for example, tomorrow. This is just to show you how things work. Now, let's say the stock opens at $26 and it go to 27. Just an example, okay? 27. So this is another green candlestick. As you can see, I put it like green, and this is a green, and the direction is going up as usual because okay, it's going from lower to up. This is the open and this is the close. This is the close, this is the open, this is the open, this is the close. It means the whole day. Now 27, let's say tomorrow it opens, let's say at 27. Okay, 27. It goes up a little bit to 27.30 cents, but this is the first, and then it goes down. It goes down like this until it reached $20. It was a bad day. Okay, $20. Maybe news, maybe earning news, maybe whatever, but it's going down from the morning, okay, from the open. This is the open and this is the close. Okay, this is the close. Now, if you ask you the question why you see that going long, it takes time, 2 days, but here in 1 day from 27 it goes to 20, so bad and so quick. why this day, which is tomorrow, let's say we are on tomorrow also, let's say what are the actions that makes this selling short, you can make more money than going up in most cases. Why is that? Okay? Why is that? What's the difference between one day here, day 1, day 2, and here the third day, which was so bad? Now, this has to do with what we call demand. I always use economic and technical analysis words. In economy, it's called demand, and here we call it supply. I will tell you right now the thing. Now, when the stock goes up, it means there is a demand. People are buying. It could be day traders, swing traders, investors, whatever. People are buying because of certain use. They are buying today and then they buy tomorrow. It means yesterday they bought, today they buy, and what will happen in the tomorrow, we will see it right now. So there is only one action which is called buying. One action, you should buy the stock in order to go up, in order to make money and going long. This is called demand. Now, what happened in the supply? Why it is going so bad very, very quick? Okay? You compare tomorrow, from 27 it goes to 20. Okay, it is 50. It is $6.50 going down. Okay, and here it goes from $25.23 to $25.99, and then from 26 to 27. Here it goes $1. Here it goes less than $1, and then here it goes $6 down. Now, if you want to compare, we have the same thing from demand to supply. What is it the thing? First, we have what we call selling, which is the opposite of buying. This is normal, because here we have buying, here we have selling, so they are equal. Equal, it means demand and supply. It means you buy, the stock goes up, you sell, the stock goes down. This, I'm speaking about all what we call all the traders that are there. Okay? Now, what is the advantage of selling short? What is it? It is second one, that it is most interesting for day trading, which is selling short. This is another thing that makes selling short, that makes selling short better in making money than going long, if these two are together. Okay? Now, what's the difference between selling and selling short? Okay? Now, selling, it means you own the stock. Let's say you have been buying the stock for many weeks and you begin to make money. Let's say you make you see that the stock today is 27. You make a stop loss, let's say at $26. Just an example, okay? You put stop loss because you have been into the stock for many weeks, so you have made money. Let's say you have, if you exit at 26, let's say you make $500 in this stock, so you are into a profit. So you don't want that the stock go down one day, so you put stop loss. So this is where we have selling. It means selling what you own. Now, what about selling short? Do you own the shares that you sell? No. And here comes the best thing in the stock market is selling short, because it doesn't exist. It doesn't exist elsewhere in businesses. You can't go and sell someone's car. You sell it and then when it goes down, the prices go down, and then you buy it again and you make a profit. This will never happen in other businesses. But in the stock market, you can do it. Those people who don't sell, okay, what you do from the broker, you borrow these shares that are not sold, because there are a lot of people, they are investors, they don't sell, because one day, okay, when the stock go down, they don't sell like that, okay? They should see the company, if the company fundamentals are bad or good, and so on. So selling short is to borrow shares, and what you do with them, you sell them in the market. These shares are not yours. So next, when the stock is going down, you should buy back them again. It's called buyback or cover. This is the two words that we use. You say buyback or cover. It means you borrow the shares, you sell them, at the end of the day or at the end of the trade, you buy back, and you give it to your broker. And what is the difference? Okay, the difference, you take it as a profit. So this is why selling short has an advantage. It means you don't have nothing. You don't have shares, but you can sell them. And believe it or not, sometimes when there is a bad day, the supply, it means all the people are selling because they are scared. They are scared because the stock doesn't go down a little bit and go up, but it's still going down. It's still, as you can see, going down until the close, and this stock is going down because of bad news. It could be earning news, could be bad news, it could be anything that it is bad for the company or for the industry. So, in order to understand this clearly, we can say that if you go long, there is only one action. If you sell short, there are two actions. People are selling because they own, and you don't own and you sell. That's why you always try to see and ask yourself, why the stock, when it goes down, it goes so quick? Why is that? It is just because there are two actions in this day. Some people are selling their own shares, and there is some people who are selling shares who the owners don't sell. Let's say you don't put stop loss, and you are following the stock, and tomorrow there is bad news, and your stock go down from 27 to 20. Okay? So understand that maybe your shares have been sold and given to you back without your knowledge, and this you can do nothing. It means in the jargon of the business, you can do nothing, because this is your shares. You have them. Okay, they don't go anywhere, but your shares are always there because it is virtual thing. Okay, so here I just try to make a point for those people who really don't understand the market, and they always go long. They think that the market in their heads is always going long. Going long is for investors or certain type of swing trading, position trading in good times. In good times, most of the stocks go down, most of them, not all. So whenever you are having good criteria, you can find a bargain and you can buy these stocks and they go up and you make money. But in a troubled market, in all the markets, selling short, you will find stocks to sell short, because the bad news are always there for companies, for industries, for you. If you are watching TV a lot, you will see bankruptcies of companies. You will see stores, for example, a big name, and it cut its stores in USA. For example, they say 100 stores have been cut in in some area of USA because they are not productive anymore. This happened with JCPenney. This happened with Sears before. It happens with a lot of companies. And this bad news for you guys who sell short, it will become an easy money. You just go and search in the morning wherever companies you have, or if you find a company that you know it has trouble and you are following it, put them into a portfolio and follow them each day. If the stock is going down, that day you just sell short. But understand that this is a trade. It can go down and go up again. So you need to practice a lot. And I suggest that when you begin to use selling short, what you should do, you should buy few shares only. It means you sell short few shares, because you are just trying to practice. You are not, you don't control selling short good in order to buy a lot. And most of the time, try to be careful of penny stocks. Penny stocks are very dangerous, so don't play a lot with penny stocks. You see them, they are small, but you can lose a lot of money if you don't know how to handle that. So try just to go with stocks that are bigger stocks, $10, $20, $30, $40, because we have the chance to see the stock going down and to make some money in the future. Okay, so thank you very much for watching. Please, if you have any questions, just ask. Thank you very much.